Hello, today we are going over the BRRRR strategy and the second R in BRRRR, which is rent. If you have any questions, please put them over in the comment section. And this is all recorded. We put it out on YouTube so everyone can get this information. And once again, we look at this whole strategy in a unique position because we're coming from the loan, the leverage side. Without the leverage, you're not able to use actually BRRRR completely. So we know that there's two main parts in the BRRRR strategy that are most important. That's buying it right, buying a property right, but then also leveraging it so you can accelerate through and buy more properties and keep repeating this. So today we're going to go over how rents impact the leverage of the loan. We're going to talk about loan. I know a lot of people don't like to hear the word loan or mortgage or anything else like that. But that's what it's all about. It's about the leverage, how you accelerate through this. Typically in BRRRR, typically when we do in BRRRR, if you had cash to buy properties, so there's going to be some leverage in that. We want to just make sure you do the leverage correctly by lowering the amount that you have to put into a property and expanding your cash flow, getting more cash flow out of a property by making sure you get the best leverage loan for your BRRRR that you could get, the lower rates, the more monthly income you make, the faster you pay it off, all those things. So leverage is important. And we're going to go through this, the second R, based on us looking at how rents impact leverage and things that you could do with that. So we have a series every week. The third week of every month is about BRRRR. So if you haven't seen any of these and you want to go through it, please go back and review them because there's a lot of great information, not only here, but in some of the other videos we have. So go out to Hard Money Mike, our YouTube channel. Make sure if you can subscribe, it helps us, it helps you, because then you could, give us some comments, give us some feedback. What else can we do? What else can we help with? Or if you have a question, go out there, look at it. And it also keeps you informed when our next ones come out, because the refinance is coming up, which we look at this as the second most important. Like, I always look at it, value add properties is buying them correctly, but then it's how do you leverage them correctly? How do you make sure you leverage them so you accelerate through this? Our goal here as a company has been for the last 20 years is helping real estate investors learn so they can earn, make the money starting from little to nothing. That's where BRRRR comes in. And, getting to where you're doing maybe 3 flips a year and making $100,000, $150,000. Getting to that point where you're bringing in, $100,000 to $500,000 a year in income through real estate investing. It does take some time. It does take some knowledge, but we've helped people come from little money to no money in to where they are making those kind of numbers. We do 1099s and we hand out the $500,000 1099s for people who are lending money, but we also see it on people who are just doing maybe 4 flips a year. And they're making $150,000, $200,000. So that's what this is all about. It's all about learning and becoming where you can live the life you want, the way you want, and not be held down by the constraints of a job or something else like that. So who are we? Hard Money Mike. We're investor friendly. We have been for 20 plus years. This is all we focus on. So our goal is to make you successful. With some of the strategies we've learned that, looking at thousands of different transactions. So we want to build the trust so you could build your portfolio. We can help you with several different transactions, is from flips to rentals to whatever it is. We're here and we can help you with these different things. And that's our goal through here. So once again, this whole episode is focused, the uniqueness about some of our, YouTube videos, webinars, whatever you want to call it, is we focus on the leverage and how everything impacts the leverage on a property. So in this episode, we're going to go through, rents, the impacts, all of these things are going to, go back to one thing. If you want the maximum leverage, you're going to need to know exactly what that property can rent for. If it's short-term rental, like a VRBO or traditional rental, you're going to need to know this stuff. But not only that, we're going to emphasize that it's important before you even purchase your next, BRRRR property, your next rental, is you know exactly what kind of loan you're going to get on the traditional side even before you purchase and close on the transaction. So we want to make sure you understand the best way to leverage a property to accelerate through this investment. So number one, how do rents impact loan choices? So we're going to look at this from a lender's perspective and how they look at you qualifying for the best loan you can. So there's going to be two different kinds of choices when you purchase a rental property. It's either going to be a traditional rental agreement where someone's going to sign a lease for 6 months, a year, 2 years, and they're going to pay you every month the same amount, or it's going to be a short-term rental where it's either going to be like an Airbnb, VRBO, or traveling nurses, or there's a few people out there who actually rent to insurance companies. When people are displaced from their home because of water damage or fire damage, they put some of their clients into short-term rentals, like 3 to 6 months also. So there's all kinds of different transactions out there. You just have to understand up front, lenders look at each of these rental agreements completely different, and how they use the rent to look at your debt coverage. Because in traditional loans, if you call it a bank loan, normal loan, traditional loans, whatever it may be, that if you're looking at one of those kind of loans, they're going to make sure you qualify based on how much debt compared to your income that is showed on your tax returns, plus what the new property will contribute to that. So once again, this all wraps around one thing, and that is knowing what you qualify for upfront before you purchase, and talking to your lender and going through this like, hey, can we use all of our traditional funds from the rental to qualify, or short-term, or there are other loans out there too that you have to understand too. Like there are, let's just call them, they're called rental loans, DSCR loans, and all they do is they look at the rent from a traditional standpoint, and if that rent covers your payments for principal, interest, taxes, and insurance and HOA, then you could qualify based on credit score. So they're not going to look at your tax returns. They're not going to look at how long you've been in business, or if you just started investing, any of those things. So there are a couple of choices here, and your income, your rents are going to really determine exactly which way you could go. So understand rents are going to be looked at differently by different lenders in different circumstances. Once again, take this knowledge, talk to your mortgage person up front before you purchase the property. So how do lenders look at these short-term rentals, VRBOs, versus the traditional rentals? So number one, typically lenders will use 70% to qualify you of a traditional rental. So if you're renting a property for $2,000, what the lender will do is they'll give you 70% of that, $2,000, to qualify for this particular mortgage. If that does not cover everything, then you're going to have to use the rest of your income you make outside of this to qualify for a traditional loan. So now the differences on the short-term rentals VRBO, if you do not have a 2-year track record or history, they are not typically going to be able to use those incomes for this. So you may have to go the traditional route and say, well, this property may qualify by using the traditional loans, even though you're going to do the VRBO. Some lenders will allow you, based on what the traditional loans will be, to use to qualify for VRBO. And what we see typically is someone maybe pay a little bit more for a rental property that's VRBO because they think they're going to 2 to 3x the normal rents. A lender's not going to look at those unless that property and you have a history, because there's a lot more that goes into that, like from your ratings to how clean you keep it to, how much you're charging. So unless there's a history, they don't know what to use and how to use it. So let's go back to the beginning again. all this does is before you get into it and you pick your path, you sit down with your lender, make sure you qualify and get the best leverage, best loan you can, to not only put less money in the property, but also increase your cash flow. So, just looking at this from a different angle is like, what will they use? What won't they use? The number one thing on the traditional loans is they will look at your lease if you already have a lease, and they'll compare it to market rents. So let's just say you signed a lease for $3,000, but when the appraiser goes out, they're going to check rents around the neighborhood, and the average rent is only $2,000. They're only going to allow you to use the $2,000, the lower of whatever your lease is, unless you have at least a 12-month history of getting that higher rents, and typically BRRRRs, you're getting into this new, or market rent, so the lower of those two. So you can't go out and have your brother or sister sign a lease for over market values just to make sure you qualify. They're going to verify this. They're going to check this. We want to make sure you get the best leverage so you can keep powering through and finding more and more properties, get to the life you want. So let's get this whole leverage, this whole loan figured out up front, and get you into the property that will cash flow the best it can, and it hopefully also grow and build equity through this whole process. So we wrap this whole leverage thing around the one thing. Before you buy, go sit down with your mortgage professional, go down and talk to your banker, whoever it is, and say, this is what I have now. Here's my options. Maybe you don't have any income and you're just going to use rents, or maybe you don't have the history, so you're going to have to use the current rent. So you're going to have to look at a DSCR kind of loan for leverage. And that, knowing this all up front, instead of getting into something, getting it rehabbed, and then sitting there going like, I can't find a loan, is not going to get you to where you want to be. It's where you want to be is using the real estate investing to get to the life you really want. So if you have a deal, we'd be glad to help you look at it or refer you to someone in your area, your market that can help you. If you're still trying to learn, understand this, like I said, go out to our YouTube channel. We have lots of different kind of videos. Some of me doing is some fun little videos that Jenna puts together, but go out there, subscribe, like, so we could keep growing this and helping more and more people get free in real estate. Reach out to us. Let us know how we can help, or, just a quick question, just email us. We'll get back to you. Or go to YouTube and, send a message out there and we'll get back to you too. So this whole BRRRR series, we're going on to what we consider the second most important thing about BRRRR, which is the refinance, the leverage. How do you maximize that? How do you put less money in? How do you set it up to win? And then everyone talks about cash out there. How do you set this up to actually do a rate and term over cash out? And what's the difference? And what is the rule of 75 to make sure you put little to nothing in? That'll be coming up in the next series, which will be in a month from now. So if you have any questions, once again, reach out to us. We'd be glad to help. Go out, look at our our YouTube channel, check through some of the videos. We're here to help you accelerate through this to get you free in 3 or even sooner. And we'd love to help. We'd love to hear from you. And as always, happy investing.